stock tip. Best stock setups.
Hi, welcome to a new episode of Stock Tip Daily Update. I'm Marcel Todia and let's talk about the market. Excuse me for being a little excited today. I've just had a wonderful day. Ever since last week I've been saying, I think ever since Thursday, I've been saying be careful, don't do anything crazy. A bounce is going to come sooner or later. Bounce is going to come, and on Friday, in the last minutes of the trading hours, I've actually opened two long positions on the Nasdaq and on the SPY. Well, they didn't go quite as well as I expected, but nonetheless, the market did surprise us today with a long-awaited bounce, and with this long-awaited bounce, I've managed to get myself a nice 5.5% to the whole portfolio value. So 5.5% in one day. That's what most funds offer you in a year. And with that, that's not much I need to say anymore. I will show you in a couple of moments how the trades went. I've marked them for you, and we'll get to it. First, you see here the SPY actually, against my expectations, opened with a gap down and then swiped through the last support level. This was the 426, 425, and for a moment there it seemed like the whole sky was crashing, only to be surprised in the, I think, midday. We've had this nice surprise as this came here. My first position was already stopped. I think I will explain to you. As I've said, I've opened two long positions on Friday, one on the SPY and one on the Nasdaq. We'll get to that just in a couple of seconds. And I've expected actually that we would start with a gap up, and it turned out we started with a gap down. My whole risk was very small, but nonetheless, I think with the two of them, I've lost 1.5% in whole portfolio value, as I expected. Nonetheless, that's what I've told you on Friday after the market closed in the weekly summary. So the strategy was, in this case, to wait 15 minutes. Hopefully we would get a bounce after the gap and place my stop under the low of the first 15 minutes. So as you see, that didn't hold up good, and I was down 1.5%, but not to worry, you just have to wait. You just have to wait, and finally this moment came. I've seen this candle here, this hammer, and it was already pretty late in the day, and there wasn't pretty much anywhere else to go. We were already very low, so where else would we go? Only up. And then we've reached the support line. We've consolidated a little, just in the 5-minute chart you'll be able to see it better. We've consolidated here 1, 2, 3, and then the breakout, and it was in this chart where I've opened my next long in the market with a very tight stop here. That's why I was able to open 3 times as big a position as I had on Friday. And then the market came with the next surprise, this one in the 15-minute chart, namely this one. We broke out, we got a pullback, a nice consolidation, and then the next breakout. And here I bought another position, I think a third of the initial one. So all in all, I had 4 times the amount I had on Friday on the short side. And the stop for the second position was here. Slightly a couple of minutes later, or the next hour or so, we've had the next pullback, and there I got a little afraid, but my stop held. You see here both of my stops, this one and this one, held good, and then the final breakout came, and we've closed the day here. This is just post-market movement, so we've ended the day at a day. Actually, we've already closed the gap, and we've entered the day above the gap. And the same thing, but absolutely the same thing, just like a mirror image, happened here. The first entry with an tightly placed stop, and then above this line came the second entry above this line with the next tightly placed stop here. So this was my second risk. Also, the stop held here, and off we went. And a very nice position. After this final breakout, I've put both of my stops to the same level, and now we'll from now on here also. So both my stops are now here. So from now on, we can talk freely about one position. And on the not just on the plus side, further, I've also opened position in the Russell. The Russell has also tested the support line. Come, Russell, come. Tested this final, not final support line, a small support line here. Has also tested the support line. Just barely touched it and then turned around. And I've opened my position. Sorry for that. I've opened the same thing. I've opened my position above the support line with a stop here. And then we just went on. This is where I already took my first profits. The Nasdaq, I've taken my first profits here, just beneath the 50 moving average in 15-minute chart, and in the SPY the same. So just slightly beneath the 50 moving average in the 15-minute chart. I do my day trading and my swing trading mostly in the 15-minute chart. The reason I do my day trading mostly in the 15-minute chart is that I'm personally I am at my desk or at my laptop. I don't even really use a desk. In the final trading hours, in the final 2 or 3 trading hours of the day, and when I finally come to the desk, I can't even trade in the 2 or 5 minute chart anymore. Those aren't any setups that you get. But we are deviating from our story here. So my personal rule is when I get 2 times the amount on my initial risk, I take profits. I've made an exception today. I think I've taken these profits at about 4 or 5 times the initial amount, here the same. And in the Russell, I wasn't that greedy. I think here I only had like 3 times my initial risk. So all in all, I think I did manage to get this one only about here, because I was paying attention to the other two, and this came as a second thought. Let's see how the IVM is doing. Why only the first two? What's the plan? The plan is when I hit, so in the IVM, I think I won't be taking any more profits until I reach or until I get slightly below the 20-day moving average, EMA 20. And in the SPY and Nasdaq, I really hope the bounce is going to hold a little longer, but I have my doubts. I think we are still at the beginning of a crash, and we will finally get this bounce. and then the only way to go is down. That's what I expect at least, and that's why I think I will take my next profits here, a third or a half of the whole position, of the whole remaining position, at the intersection with the EMA 9, so the 9 exponential moving average. The target would be in the SPY and in the Nasdaq the 20-day moving average. So that's my thought here, and that's the strategy. So the first profits are taken. The stop is at or just above the entry level, so it doesn't matter what happens. We are in plus. We are going to lose money on this trade, but it's to expect that we will get perhaps another 5% to our portfolio, and that would mean since the beginning of the year a nice round a profit since the beginning of the year, only since the beginning of the year, since the time I found its stock dip, a nice round profit of 20% whole portfolio value. So where do you get it? Where do you get it in a month? The most funds are going to give you 5 or 6% a year in average. That's average. That means most years you only get 3 or 4%. That's from my experience at least. So that's the strategy here. I still think this is only, I repeat, this is only a short-term trend, this ascending trend until we meet the 9 or the 20 moving average. We shall see which one holds. If we go further, then I don't have any problems with that. As I've said, I will only take a couple of profits here and there, and the rest of the position is going to go further. So if we go further north, fine by me, but I doubt it. I think this is only a technical bounce, and the technical bounce means we've fallen too high, too low, and too quick. What I always mean is this is a very vertical movement, a very big and vertical movement, and after a very big vertical movement there comes a reaction, and that's a pullback, a technical bounce here. And after this technical bounce is finished, I think we will resume our way down, and I think the markets are still going to crash. That's to expect this year at least. How is the German market doing? Also good. Also good. On Friday, I didn't get to mention this. The last time I reported on the German market was here, and then the German market also imploded with a gap down, and today it opened here. So this is pathetic. But also beneath the last support lines. I think we've just managed to end the day above, but all in all, it's still a bleak look, and the other markets aren't doing any better. No. We'll see what happens the next weeks. This week we are concentrated on our technical bounce, and perhaps when we reach the 20 and get a new setup like this one, I won't be making the same mistake from Friday again. And then we are jumping in on the continuation on the downtrend again, and perhaps we'll make another 10 or 20% on the way. Well, it would be a nice look, a nice sight to have. I think 30-40% in just the first 2 months, but 20% in the first month is also something. You don't see that every day. Euro to US dollar, I was pretty happy with my dilution here of my of my euro hedge, and this has also protected me a bit today. I think I should have lost 2% in the beginning of the day, but I remained by 1.5% because we were here. So it's a nice hedge to have. By the looks of it, you can't tell at the moment which way it's going to go. If you are going to test the resistance line again, or if you are going to continue down. We do find ourselves at the moment beneath all of the moving averages. We've just had a hammer, so there's nothing you can say about the euro to US dollar. I think we have to be patient and just wait. Meanwhile, my portfolio still is 100% or 99% US dollar. Oil made the long-awaited pullback. I've been saying for weeks now that the oil is overbought and overvalued, so the pullback came. I think we won't be able to break the breakthrough, or if you break through, we are going to get the next pullback. I don't think oil is going to impose itself at the moment. And then gold, I see that the gold wants to break out. Perhaps the breakout will come tomorrow. So this is a perfect setup here. This is a very nice setup. We've had this movement up, a little pullback, the next move up, and just below the resistance line, we've managed to consolidate 3 days in a row and not fall. And we've closed the day just beneath the resistance line. We haven't tested it, so we don't have any outside reversals. This is the perfect scenario for a breakout if you like to invest in precious metals. I don't, for a good reason. If you do any swing trades, then you know you always fear the gaps, especially a gap down. I just had one today. If you do open a position here and the next day you find yourself here, but your stop was here, then you've destroyed your stop. You've ridden through your stop, and you've made I think 3 times your initial risk, and you're 3 times the amount you initially planned. You are down. That's why, and that this always happens in gold and silver. Look here, gap, huge gap, another gap down, then a little gap up, a little gap up, huge gap down, gap. Oh, everywhere you look, there's a gap, another gap. That's why I don't trade precious metals. Especially in this market times, I like to stick by indexes, only almost exclusively index trades. So silver is doing pretty much the same. Silver had an outside reversal on Thursday, and we are still lucky to find ourselves above the 90 moving average. We've defended the 90 moving average, and we are still in a position to break out. Let's just see what happens the next day. Like I've said, the same story applies here. Gap. So you have no way of controlling your risk in precious metals. If you do want to trade precious metals, then you must take into account that a gap is going to appear sooner or later, and you have to give your trade a lot of room, or you're going to be stopped. Not only stopped, but you're going to find yourself in minus. Always in minus. Always. If gap up comes, then you're going to celebrate a little, but the gap ups, the up gaps, or whatever you want to call them, they're usually pretty small in comparison to the down gaps. So these are huge chunks here. Another one, and this is a gap up. You can barely see it. That's why just be careful, and if you do decide to trade them, then give them a lot of room. For example, don't do any aggressive stops here. Put your stop here somewhere, and that should suffice it. Further, you can take a look at one of the last setups I've given you, and this one was Apple. I've given you Apple last week, and since I've given it to you, Apple has actually managed to pretty much touch its target, pretty much touch it. I didn't want to trade it, as I said last week. I didn't like the position where my theoretical stop would be. You didn't have a really sufficient risk-reward ratio. That's why I'm going to wait for the pullback here as well. Perhaps we'll touch the 20, and then if Apple turns again, I'm going to short it, but only then, after the pullback. So Apple still remains, for those of you who've taken it, I've seen there was a lot of interest in Apple. I think this interest began just as soon as I posted about the setup on our website, stock-tip.com. And just as soon as I've posted it, I think I've posted it on the website, but it was seen on Facebook. Just as soon as I've posted it, it continued south, and it pretty much reached its target. So for those of you who've taken the setup, then congrats. For those of you who haven't, don't be sorry. I think you will get your chance in actually, I think this week, not later than this week. The next ones are Amazon and Google. They've both reached their support line last week, and we haven't really managed to conquer it today. Not in Amazon and not in Google. So in Google just a little, in Amazon just a little, but they still look very unhealthy. And I expect that they will also get a nice pullback here to the 9 or to the 20, and then continue south. And with them, as I said before, if the biggest titles in the S&P 500 and in the Nasdaq fall, then the whole market falls with them. They have the same weight as, not the same weight, but they have a huge weight, and I would say if these 5-6 titles fall, or if the Russell falls, it's pretty much the same thing. Either one of them. So Netflix still looks disastrous. Nvidia started with its pullback today, and we've managed to fill this gap. I haven't seen here a nice entry possibility. This might have been one, but it was a little too risky for me. We were still at the time of this little breakout, we were still below all moving averages, and it's not something I trade lightly. Then to my portfolio, IRTC actually got stopped today. My stop was at 117, and it just slightly stopped, but then I bought it back again. It saw very healthy. It saw like a hammer, and if it goes down again, I've bought my initial position again, and this was such a tiny position. I've calculated, and if it closes, if it gets stopped again, I would lose $23. So why the heck not? Especially if you see the weekly chart. So why the heck not? Okay, and now to the third part of my video. We get to see the setups, the ones that have survived this carnage. You will find the third part of our video on our website, stock-tip.com. There you will also find a replica, actually the exact size of our portfolio and its growth, also all of the scans. I think I've updated the scan page, and they aren't 100 anymore, because of this carnage, but they are still very valuable scans there. So take a look for yourself, and I think in 2 or 3 days I am going to be able to update also our nice trades, our nice profitable trades with monstrous risk to reward ratio that we've profited from. Okay, then thank you for joining us today. I will be continuing with the third part now.